Robschild, no investment advice. Welcome to the show where we view financial markets using Ben Graham's investment philosophy, macro technicals, and crystal ball gazing. Today is Tuesday, December 31st, 2024, the last day of 2024. Today's episode. Happy New Year, everyone. Hope you're doing well. Markets are closed tomorrow to celebrate the new year. Daily reminders, no changes, CAPE ratio dropped 37, rounding down if you want to hear me read through them. Again, Friday the 13th is the title, with a tornado in the ball in the thumbnail if you want to see me read through these very important reminders as to what's going on macroeconomically. Same thing for the crystal ball readings, no major changes. Watch Monday's show to get all of the insights and walkthrough of all of this going on. On to the charts today. We had a bit of a continued down day. This is odd. This is odd for this period. Typically during the Santa Claus rally, the professionals are home. They're having fun. They close their computers. They're not actually looking at markets for once. The volume's very, very light. And yet the market's still selling off. This can be very foretelling as to what is to come. If markets are selling off now, it increases the possibility, let's say, the probability of markets continuing to the downside in January, as some people are speculating at this moment, including myself. The Santa Claus rally is supposed to float up nicely just little by little, and instead collapsing down to this little trend line here. Maybe the professionals didn't go home as much as we expected them to. What will happen from here will be very interesting. First week of November, January rather, especially. One thing I wanted to bring up is DXY, the dollar index today. I have been talking about this very obvious bull flag here, consolidating tighter and tighter, breaking strongly to the upside today, the last day of 2024. If this continues, it will put a lot of pressure on global economics. When the dollar rises, things can get sticky. There is a lot of dollar-denominated debt out there that needs to be paid back, that you have to pay those interest payments in dollars out there in the euro-dollar world that we live in, as the dollar still remains currently as the world reserve currency. And with the dollar going higher, it only spells slowdown in the very near future worldwide. Moving on to Bitcoin, if you've been following me and my show and my posts and all my nonsense, you know that I have a very small short. It's about 1.5% of my entire portfolio in shorting Bitcoin with BITI. I'm still holding that position. Admittedly, this is not the greatest chart setup. Ideally, what you really want to see is a break below this blue line and a retest before going short to assumably go down to the 75,000 level. The reason I can sleep well at night holding this position is, well, first of all, it's only 1.5% of my portfolio, and second of all, with the Santa Claus rally showing maybe turning into a dally or a valley, as we might end up calling it after it's all said and done, things look more volatile than normal, and I'm willing to take that chance at this time. We'll see how it plays out. I'll certainly keep everyone updated. The VIX, notably, is this an inside candle of yesterday's candle? It appears to be so. Look at how tiny that thing is. The options market has no idea what to do here, although we've been trending notably upward with these recent spikes on Friday and Monday. When I gaze into my crystal ball, I see perhaps the VIX may continue to the upside from here. We may see more volatility than most people actually expect in January, but we'll see. TLT, my favorite place to be. I have 7% of my own portfolio still sitting in long duration treasuries. I've been leveraging up in this area, especially since it looks like we've bottomed out here and appear to maybe trend back to the upside. I'm not completely sure. A lot of people are suggesting that the 10-year note is headed towards that 5% level based on some trend lines. Again, my game here in treasury bonds is not just chart patterns here. This is my macro view. This is my Benjamin Graham view. This is my, looking at the valuations of the earnings of the S&P 500 compared to the bond yields right now. And it seems really out of place along with historically tight credit spreads, which tells me that, there's a grand possibility of run to safety from here. And so, I do have a crystal ball. I always say I don't have a crystal ball, but I do have a crystal ball for sure. I'm telling you, the money will be running to safety in the extreme near future. The biggest headwind that I see against my narrative is the fact that we have new people taking charge of the U.S. government that, maybe they'll surprise us with this or that, and maybe the market will react in unexpected ways. Certainly something that needs to be reconciled with for all investors is that unexpected things happen regularly. And, they don't happen until they happen. And that's it. Any way you look at it, I like the risk reward and the valuation here, and I still believe in my macro thesis. And so I'm long treasury bonds. Looks like we might be headed higher, especially if equities get a major sell-off. There will certainly be yields across the curve will certainly drop if we end up in a collapse of equity prices, let's say. I noted on yesterday's show how we had December's contract looking like we had the highest probability. It was like 5 cuts total from where we are today, and now dropping to 2. Again, I don't trust. You got to take this tool, the CMEgroup.com FedWatch tool, with a huge grain of salt. I've seen way too many errors on here in the past. So anyway, long story short, we're back to 1 cut priced in for all of 2025 as it stands. Until we get that black swan event, until things are more obviously slowing down, the Fed funds futures are willing to bet on only 1 cut being present for all of 2025. You can't blame them too much. The inflation rate certainly hasn't shown proof of continuing to collapse, although we have a lot of other metrics clearly still in a trajectory straight down, or in the case of unemployment, clearly not clearly going the other way as it stands. Interesting macro environment that we're in right now. My biggest take on all of this is the fact that the 3-month, 10-year inversion treasury security inversion lasted it was really deep for over 2 years, which is historic, and it's screaming that there's a humongous slowdown coming. That alone should, say, let's be cautious here, along with the S&P 500 at, like I keep saying, the PE valuation of 30 or 31 and the CAPE ratio being at 38. It's obvious. It's obvious to those of us that understand the implications. Could we be wrong? Could this be the first time in history where, all these signals are screaming that there's a slowdown, that like there is no slowdown and we do get that soft landing? I guess it's possible, and I'm not betting on it. I'm betting on the other side. Dr. Copper with a PhD in economics showing extreme weakness today. Funny enough, on yesterday's candle, clearly rejecting strongly off of this trend line of this massive head and shoulders top on the price of Dr. Copper, continuing to the downside. I did say yesterday this is an obvious rejection, and I stand corrected. I stand rather to be correct, proven right, let's say, with copper continuing massively to the downside, dropping 1.6%. At this point, anybody that follows any charts sees this very clearly, and it's expected with extreme high probability at this point for the price of copper to drop significantly. And if it does so, what does that mean? That's disinflation. That's deflation. That's global slowdown. That's a global economic slowdown. Last chart of the day, I've been bringing up MSOS, a cannabis ETF, talking about how insane that I think it is that this entire index of companies that produces this stuff. Again, the biggest worry here is obviously political risk, and I think that the fear has gotten overdone, and I think we're at max fear. I don't think we're headed to new lows, especially after today's pretty big engulfing candle of many trading days previously, going up to $3.81. This may be the bottom of this industry. And that's all from me and my crystal ball. I hope you enjoyed. Thank you for watching, and see you next time. And Happy New Year's, everybody. Robschild.